into our tax law. If you want to, you're able to also follow along with us in your 4012. This is going to be tab A, who must file. So there's 3 criteria to determine who must file a tax return, and that is based upon a person's age, their gross income, as well as their filing status. And we talk about their age as of December 31st, their gross income. We're going to determine what all is considered gross income or factored into gross income, and then the filing status. And so we'll be covering filing status a little later this morning. So going to look at the chart, we'll be looking at chart A for most people who must file. This is in the 4012 and it's page A1. You should see your A1. It should be at the bottom left or right of the 4012. So from this chart, we take determining if a person's filing status, if they are single, married filing joint, married filing separate, head of household, or qualifying widow, widower. And then we take a look at their age in the middle column. If they were under the age of 65 before December 31st, are 65 or older as of December 31st. And then we also take a look at their gross income. And when we look at their gross income, it will be, their gross income is all income that's received in the form of money, goods, property, and services that is not exempt from tax, including any income from sources outside of the U.S. or from the sale of your main home, even if you can exclude part or all of it. And I would say for a reference for most of our sites, if a taxpayer, if their only source of income is Social Security benefits, then in most cases, they will not have to file a tax return and their Social Security income is not included in gross income. That is in most cases. So just using this chart right here, giving an example, if we have someone who is single and they are 34 years old and they had gross income, W-2 income of $13,000, they would be required to file a tax return because you'll see single under the age of 65 if their gross income was at least $12,400. So based on being $13,000, they would be required to file a tax return. So what about if we had someone that was filing head of household and they are 34 years old and they only made $16,000? Well, if we go down a little further, we will see filing status, head of household, under the age of 65, they have their gross income was at least $18,650. So that individual, they would not be required to file a tax return. So again, just making note of this chart, this is for most people who must file. So I would also like to point out the key word must file. And so the next chart on the next page in the 4012, we have our chart for children and other dependents. So this is the chart for those individuals that can be claimed by someone else on a tax return. So they would not be using the previous chart. So this one we would see, for example, if someone was single, either 65 or older, they must file a return if any of the following apply. your earned income was over $2,750. $4,400 if you're 65 or older and blind, or your earned income was over $14,050, $15,700 if 65 or older and blind, or your gross income was more than the larger of $2,750, $4,400 if 65 or older and blind, or your earned income up to $12,050 plus $2,000, $3,650 if 65 or older and blind. They would be required to file a tax return. So we'll have you see it's a breakdown for single dependents as well as for married dependents. And you may not understand as of right now what is considered unearned income as well as earned income. We'll give you a little more clarity on that when we get into our income. But just letting you know, unearned income, unearned income includes any taxable interest, dividends, capital gains. It could be unemployment compensation, Social Security benefits. So unearned income is income that you have not actually worked for. And hence earned income, salary, wages, tips, business income. So those sole proprietors, those self-employed individuals, or those contract workers. That's considered earned income. And so then we're going to go to our next chart, which is our chart C. This is for other situations when you must file a tax return. And on here, I've only highlighted a few lines because this is typically what we encounter at our tax sites. So this is on the 4012, page A3. You will see line 1E. I have that highlighted. That is the recapture of the first-time home buyer credit. So anyone that took advantage of this credit back in 2008 and they're still living in that home, they have to pay a portion of that credit back over a period of time. So we do see some individuals at our tax sites that have to report that on their tax return. And then we go down to number 2, you and your spouse, if filing jointly, received HSA distributions. So they must file a tax return when they receive these HSA distributions. And that is, the HSA is individuals that has used their funds for medical purposes, or they have those funds and it's set for medical purpose and they have not. But if there is an HSA distribution, then they would have to file. They must file a tax return. And then we have number 3. You had net earnings from self-employment of at least $400. So those self-employed, those sole proprietors, contract individuals that receive those tax forms or have cash income, check income, they must file a tax return if their net earnings is at least $400 or more. And then we have number 5, advance payments of the premium tax credit that were made for you, your spouse, or dependent who enrolled in coverage through the marketplace. You or whoever enrolled should have received Form 1095A showing the amount of the advance payments. So again, this is for individuals who have health insurance through the marketplace, also known as what people like to call as the Obamacare. If they have health insurance through the marketplace, they would need to bring in their Form 1095-A to attach that to their tax return. So outside of Chart A and B, if these situations apply to the taxpayer, the spouse, or anyone listed on their return, you will see that they must file a tax return. This is in regards, this is not regarding their gross income. And so the last chart that we have is Chart D. Who should file? So the Chart A as well as Chart C, you saw who must file. But Chart D is who should file a tax return. And as you can see, I have most of these items highlighted. So for number 1, you had income tax withheld from your pay, pension, Social Security, or other income. You would want to file a tax return, and we encourage you to file a tax return so that you can get those federal taxes that were withheld, you can get those back. Number 2, you made estimated tax payments for the year or had any of your overpayment for last year's estimated tax applied to this year's taxes. So if you've made those estimated tax payments, you need to file a return to see if you're entitled to get those back or if it needs to be offset against your other income. So you should file a tax return. Number 3, you qualify for the Earned Income credit. So this is for individuals, a credit based upon the income that they make and based on that income if they have a qualifying child or not. So this is a refundable credit, which we'll be talking about later. So that means it puts money in a taxpayer's pocket. So they would want to, if they qualify for this credit, they should file a tax return so that they could get those funds for that Earned Income credit. The same goes for number 4, you qualify for the additional child tax credit. Again, this is a non-refundable credit. So that means the goal for that is once it reduces tax liability, if there is excess, it puts money in your pocket. So again, the taxpayer would want to file a tax return, should file a tax return to get that additional child tax credit. As well as for number 5, qualifying for the American Opportunity Credit, the refundable portion. This is an education credit on there. So if the taxpayer or someone on the tax return qualifies for this credit, they should file a tax return as well. Number 6 is you qualify for the premium tax credit. This credit is tied to the 1095-A, that marketplace form on there. So there is a advanced premium tax credit that is tied to it. And if the taxpayer did not receive as much assistance, they would qualify for this credit, which is refundable as well. And they should file a tax return. But they would have to file a tax return for that 1095-A. And number 7, you qualify for a recovery rebate credit, but either didn't receive the economic income payment or received less than what you are eligible for. So that is something that is going to be new on this tax return. That is related to also what we call the stimulus. So if individuals did not receive their full stimulus that they were entitled to on last year, they should file a 2020 tax return to get that additional amount. If they did not receive it at all and they qualify, they should file a 2020 tax return to receive this credit. Who should file? If you receive a 1099-B and the gross proceeds plus other income exceeds the filing limits, you should file a tax return. Also, if you receive Form 1099-S, that is related to real estate transactions related to a home being sold. And then the last one, for 11, you want to file a 0 AGI return, such as to prevent tax identity theft, to claim a state credit or other assistance. So on this right here, this is typically, again, to prevent identity theft. If a person just wants to file a 0 return, this would just be an informational return that would be filed. So we have talked about who must file a tax return as well as who should file. So what we're going to do right now is we're going to go to our first poll question of today. So this question, it says, Janet and Harry are married, they filed jointly, and live together all year. During the tax year, she turned 66 and he turned 64. Their gross income was $19,800. Based only on this information, are they required to file a tax return? You could also go and look back on page A1 in the 4012 if you need assistance to answer this question. And I will give you guys about a minute to answer the poll. Okay, so it looks like we have mostly everyone that has answered the poll. I just want to point out, if you are a UTD student, I would ask that you to respond to the poll questions. So, because we are providing this information to your teacher. So if you are a UTD student, I would ask that you respond to the poll question. Okay, and so it looks like we have 81% stating no, and 19% that states yes. So we're closing the poll now. And so where you would be able to find the answer to that poll question would be chart A. So that question, that answer is a no. Janet and Harry are not required to file a tax return, because if we go back to chart A on there for who married filing jointly, one spouse that is under the age of 65 and the spouse that is older, it has the gross income of at least $26,100. So their gross income is below that amount. So they are not required to file a tax return. So we are actually now at the point where we are going to take a short break. And when we come back, we're going to go into our next topics of the filing status.